Howdy there, folks. Today I do probably the most important video I could possibly do out there. I see a lot of people, specifically recently, talking about selling their stocks coming up here very soon, whether it be this week or over the next few weeks. A lot of stocks have climbed immensely. It's been a terrific last 6 months. If you haven't made some money in the last 6 months, I don't know what you're doing, man, because there's been a ridiculous amount of money out here to be made. And a lot of people are now considering or starting to sell stocks, specifically over the past few weeks and kind of looking into the future few weeks here. And so I understand, like, a lot of people haven't been in the market very long, so you haven't really gone through ups and downs in the market, right? You haven't had a stock go up 100% in 6 months, and all of a sudden that happens, and you're like, oh my gosh, like, this is unsustainable, this is ridiculous, I need to sell, I need to take my profits, and especially coming off of a year like we came off of last year, where everybody got absolutely punched in the face, right? And so I want to run you through some very important things in this video, to maybe walk you off the ledge a little bit, or just give you something to think about in regards to both sides of this, because the move you've seen recently might just be the start of a much bigger move, and I want you to at least consider some other potentials here in this scenario other than just this stock's up a lot, so it means I have to sell it because it's going to go right back down to where it was before, okay? I hope you guys get a tremendous amount of value out of today's video. I think it's the most important video I could possibly put out right now in this moment we're in the market, right? Year to date, NVIDIA stock is up 170%. Palantir's up 135%. Tesla's up 126%. Meta's up 112%. The Qs are up 34%, right? And that's year to date. And so a lot of people are thinking, I've got to sell these stocks. Like, this is ridiculous. Like, stocks aren't supposed to go up 100% in a year, right? Right? Okay. First off, very important. NASDAQ got wrecked last year. Peak to trough, we were down about 37%. In the great financial crisis, the NASDAQ got wrecked. It was down over 50% in the great financial crisis, okay? Now, coming out of both those scenarios, we saw the NASDAQ roar. We saw the Qs roar specifically, right? So keep in mind, this is the past 6 months for the Qs. Well, almost 6 months, right? This is a year to date. The Qs are up 34%. Now, coming out of the great financial crisis, when I say coming out of the great financial crisis, I don't mean everything was good. I mean just coming off the lows of the great financial crisis. The NASDAQ over that next 6 month span went up about 61%, went up over 60% 6 months coming off the 2009 lows, right? Now keep in mind, this was not like everything was fixed in the world, I can tell you that much, okay? The economy was a complete disaster still while the Qs rose 60% here. Unemployment was skyrocketing during this time. The housing crisis was getting far worse with foreclosures everywhere, banks going under all over the place. If I recall, more banks went under in 2009 than went under in 2008, and I believe even more went under in 2010 than went down in 2008, which is crazy to think about, right? So the world was a disaster. There was still a lot of scariness, but there was a belief starting to come into the market that things were going to get better in the future years, and that 2009 was a low, and so you needed to start to position into the market because things were going to get better over the next few years. And guess what? That prediction was right. Things got a little bit better in 2010, and then they got a little better again in 2011, then better in 2012, and better for years and years to go in the future, all the way up until we got to Rona, essentially. So the market was 100% correct. They got it right. 2009 was the worst, and things started to get better in future years, okay? And so when you see a move like we had in the Qs over this past, let's call it 6 months or so, right? A 30% plus move, that is a market saying that 2023 is a low, and 2024 things are going to get better. In 2025 things are going to get better, okay? That does not mean it's a for sure thing, but I can tell you that it's what the market is telling us right now. No different than it told us that in 2009 when things were still messy. And this year things have still been messy on many different fronts, right? Especially the first few months of the year, inflation was still really high. I think the numbers are going to get a lot better over this next few months, but it is something to keep in mind. So it is not uncommon. This is actually a pretty lame performance for the Qs coming out of this. 30+%. We had 60+% coming off the great financial crisis low, okay? But also keep in mind the market didn't get as heavy as in the great financial crisis, right? And it shouldn't have, because the great financial crisis was a whole different set of situations we had to deal with, right? If you think about a stock like Tesla, right? People are looking at Tesla like, oh my gosh, this stock is up like, 100+% in the past 6 months, right? This is insane, okay? No, okay? Late 2020 through early 2021, Tesla stock climbed 168% in a 6-month span. In the 6-month span, early 2020 through mid-2020, Tesla stock climbed 219%. In late 2019, through just before Rona happened, Tesla stock climbed 317%. There's some people very misinformed. They thought, oh, Tesla stock just went up a bunch because it was during Rona. No, Tesla stock was soaring before Rona. Actually, Rona was something that hurt Tesla's business model substantially, especially in the short term. If Rona would never happen, I wouldn't be surprised if, you know what, Tesla stock would be higher today if Rona never happened. If it never, ever happened. That's just factual in regards to that. That screwed up a lot of stuff on a lot of different fronts, including causing the Fed to obviously go insane with interest rates, which has caused auto loans to go much higher. If Rona never happened, Tesla today would probably be a $1.5 trillion market cap today if Rona never happened. That screwed up a lot. Never mind supply chains. Oh my gosh, don't even get me started on that. Late 2016 through early 2017, Tesla stock climbed 97% in 6 months. This was around mid-2013. Tesla climbed 409% in about 6 months. 409%. Let that sink in for just a moment here, okay? Late 2012 through early 2013, Tesla stock climbed 181% in about 6 months, okay? What you just saw there, okay, what you just witnessed, that is what happens to great stocks. How do you think a stock goes up thousands of percent or tens of thousands of percent? It goes on some absolutely insane epic runs where the stock goes up 100%, 200%, 300%, 400% in a 6-month span. And your mind is just like blown in that short-term time, right? I'm like, wow, how in the world did this happen? Well, many of these time periods, companies' revenues are skyrocketing, their business prospects are skyrocketing, or their net income skyrocketing. And in certain scenarios, it's all three happening at the same exact time. Now, if you look at somebody like myself, I've been a Tesla investor for maybe 5 years, 4 or 5 years, right? I think 5 years probably is about right? And I've gained 936% on Tesla stock. And what I can tell you is it hasn't been a perfect ride. I can tell you that much. It's been a lot of bumpiness, shakiness, a lot of scariness has gotten into that. But you don't get a 900% gain without having to go through that. Now, let me tell you this, okay? I sold most of my Tesla shares, and I regret it. I regret every share I ever sold. This is all I got left for Tesla now, 1,665 shares. I should have, let's just call it a lot of thousands of shares of Tesla. And I sold them like an idiot. And I can tell you, every single person that has basically ever sold Tesla stock regrets it. Almost every single person, meaning 99% plus of the people that have ever bought at least one share of Tesla, they regret it. Over 99%. Okay? Doesn't matter if you bought this stock in 2012, 2014, 16, 18, 20, doesn't matter. Almost every single person, okay? You should have never, ever sold the stock. The business prospects have just gotten better and better over time. The business in general has just gotten better and better over time. And the stock has returned 15,000 plus percent since it went public, right? And don't be surprised if it returns a lot bigger number over the future years, right? This is what people think it's like to invest in a great stock. This is how they think it performs in their head, right? It's just like, slow and steady, up and up and up and up and up. But I can show you how a stock actually performs. That's a great stock. This is how it performs, okay? This is what it's actually like to be a shareholder of a great stock. It is massive ups, massive downs, short-term scares. It looks like it's the end of the world. Oh my gosh. And then everything's the greatest ever, and it's going to be the biggest company ever. This is what it's actually like to be in a great stock over time. And you can look back at any great stock over time. This is what you're going to see, okay? Monster Beverage, a stock I personally owned many years ago, that guess what? I regret every share I ever sold of Monster. Monster used to be like a top 3 biggest investment for me. And I made crazy money on that stock back in the day. And I sold all my shares, and I regret it. I wish I should have just held every dang share in sight. Should have never sold that stock, okay? To pay taxes on that? By the way, yeah, my Tesla sales, guess what? I had to pay the government hundreds of thousands of dollars in tax money. Great decision, okay? Great decision. Same thing when Monster wasn't hundreds of thousands of dollars. It was a big number, but it wasn't that big, okay? But create a taxable event for what? And Monster is one of the greatest stocks of the past 20 years. This stock has returned 130,000%. 130,000%. Get out your calculator, okay? And say, what if I invested $10,000 in a Monster 20 years ago? Tell me what that number is, okay? So, one of the greatest stocks of the past 20 years, okay? I circled awful crashes for Monster, okay? Some of these crashes were 20 to 30%. Some of them were more like 40 to 50% type crashes, okay? And I basically was able to circle about 20 different crashes over the past 20 years that this stock has had that were awful. So the stock has crashed at least 20 times in the past 20 years, and the stock has still managed to return 130,000%. This is what you have to go through in the market. If you want the gain, you have to go through a whole lot of pain. There's no easy way around this. You're going to have some moments when the stock looks like it's overvalued. You're going to have some moments when the stock is disgustingly undervalued because the stock crashed, okay? And it's your job as a great investor to say, you know what? I'm going to let this one ride because the company executes. And year after year after year, they prove to me they execute on a high level. So it's not worth me cashing my shares out of this, okay? And I can tell you this is a lesson I had to learn over the past 15 years the hard way. I didn't have somebody to give me a talking to, unfortunately. I've had to do this all myself. All trial and error. No one there to help me. NVIDIA. People looking at this stock. Oh, wow, it's climbed so much. Oh, my gosh, it's so high. It's like 2.5 times the average forward P in the market, right? Well, let me ask you this. Do you think those numbers are right? Do you think they're only going to do $7.77 over this next year for EPS? Do you think they're only going to do $9 next year? Do you think those are accurate? Let's think for a moment. Analysts for next quarter had NVIDIA growing revenue 6%. NVIDIA management team says they're going to grow 60%. So, do you think the analysts are right now? I'm going to go out there on a limb and say probably not. I'm going to go out there on a limb and say, you know what? I think NVIDIA is probably going to smash those EPS estimates. I don't think it's a crazy thought to imagine that. And so if that's the scenario, what you think the stock is valued at today is actually far lower than what it's showing on paper, okay? So which means this stock might be at a 2024, in terms of fiscal year 2024, forward P of 30-something, which is not high for a company that is expected to grow revenues all of a sudden 60%, when the market in general has trouble growing 3 to 5% type revenue growth, okay? I mean, we're talking about a potential 10xing or more, maybe even 20xing of the average revenue for a company. That's incredible. Absolutely incredible, right? A stock like Palantir, right? You look at this stock, and analysts have them doing 21 cents of EPS this year, 26 cents next year, right? And so it looks valued heavy, right? Forward P is 70 in terms of this year's numbers. If you look at next year's numbers, 58. Do you think those numbers are accurate? Do you think those numbers are accurate? When Alex Karp's out there saying we've getting more inbound calls in a month now than we usually get in a year. When he's out there saying the demand coming in right now is unprecedented, like we've never seen. And the whole marketplace is looking for AI solutions, and Palantir's got arguably the best AI solution in the world, right? From the software standpoint. I mean, when you think about that for a moment, I don't think it's crazy to imagine that Palantir beats substantially over the next couple of years in terms of what analysts are expecting versus what the company could actually come in at, right? And you look at the analyst expectations for revenue, do you think those are correct? Do you think Palantir is only going to have 16% revenue growth in 2023 and 19% revenue growth next year when they're getting more phone calls from companies calling them every month now that they usually get in a year? And Alex Karp says it's like nothing he's ever seen in terms of interest and demand in the product. I don't know, man. I don't think it's that crazy to imagine those numbers are probably far too low. Far too low. Palantir, I look at this stock. It's done me pretty darn well in a pretty short amount of time, right? Now we're up $34,000. I can tell you, I'm going to let this horse gallop for the next few years. I'm not in a rush to sell this stock. If I was worried about Palantir going back to $10, $9, whatever, $7, believe me, like if that's all I thought this stock had was $15, and I wouldn't be in Palantir stock. If all I thought was Palantir's greatest day will be a $15 stock, I would not be in this stock. It would not be worth my time and attention. There's way too many other stocks out there that have 2x potential and have very little risk to them. Like if all I thought was I can 2x my money on Palantir, believe me, this wouldn't be worth it. It wouldn't be worth my mental energy. It wouldn't be worth my attention. Like for a stock like me, for Palantir, I got to think this company is like a 5x, 10x type company. That's the bottom line with this. Do I think it's going to be the next Microsoft? I'm not ready to go that far yet. Maybe it is, but I'm not ready to go that far. But do I think Palantir can be a $100 billion company? Sure. I think they have the potential to get there. I can see how they could get the revenues to get to that place, and they could get the net income to get to that place, and how they can hit something like a 20, 30% type net margin over time. I can see that, right? When you're putting up the type of gross profit numbers and gross margins this company is doing, I don't think it's crazy at all to imagine, a net income margin of 20, 30% long term. And so I can see how this company can become a $100 billion company, over this decade, right? So I'll let that horse gallop, man. There's no reason to sell out of that. If you look at a stock like I hold like ELF, right? I had nearly 10,000 shares of stock at the peak between my different accounts. And all I have is 1,000 shares. I missed out on tremendous gains because the stock was going up a lot. And so maybe it was overvalued or something like that, right? No. Listen, okay? Selling the stock based upon short-term valuation and shorting a stock because of short-term valuations are always poor decisions. Always poor decisions. At the end of the day, if you had a company that really is going to execute and put up great numbers year after year after year, what you think you're paying for that company is actually far lower than what the number says on paper. Okay? Because great management teams, they come in and guess what they do? Quarter in and quarter out, they beat revenue. They beat EPS. They beat revenue. They beat EPS. They beat quarter after quarter, year after year after year. And so the majority of times that a company goes to report earnings, they're doing better than analysts expected and likely better than what you expected. So which means that forward P you see is actually far lower in reality than what you're seeing on that given day. And this is why many times if you got a great company, it does not make sense. And you can justify it in your head all you want about this, about that, about macroeconomics, about everything. But at the end of the day, I'm just telling you, it's always a poor financial decision. Unless it's a bad company that's got a bad management team that's not going to do well for the next 5 years, outside of that scenario, great companies are going to put up their numbers. Let them do their thing, okay? Let them do their thing. As somebody that's been doing this for 15 years, trust me when I say this, great companies execute. And they put up phenomenal numbers, and you're going to regret selling for that 80% gain, 50% gain, 100% gain. If it's Boeing stock, that's a horrible company with a horrible management team that can't never do anything right. Boeing always screws up. If Boeing gives you a 50% gain, take that 50% gain and run. But some of these companies are a whole lot better than Boeing, okay? If it's flipping flapjack and Yum Brands, and Yum Brands gives you a 40, 50, 60, 80% gain, take the money. Some of these stocks aren't Yum Brands, okay? Just keep that in mind. Now, if you're scared about a crash, right? Oh my gosh, all my stock's going down. Hedge! Quit being lazy. Learn how to hedge. You don't need to be a rocket scientist to learn how to hedge a portfolio and do it properly. Literally in my last video, I just went through a whole bunch of strategies on how you can learn to hedge your portfolio. Okay? Whole bunch of strategies. And there's a lot of different ways to learn to hedge a portfolio if you want to hedge a portfolio. So if you're really that scared, you don't have to sell all the greatest stocks. Nvidia and Palantir and Tesla and all these stocks. You don't have to sell them. Just understand there's other options out there. There's ways you can hedge your portfolio. There's a million different strategies out there, folks. And you choosing not to learn how to hedge a portfolio is just being lazy. Just understand that. It's just pure laziness. Anybody can do it. You don't need to be the smartest person in the world. So, and this is stuff we all go through in obviously the private group all the time, is like running portfolios, hedging portfolios, like all this type of stuff. We go through, have, hundreds of videos and course curriculums like teaching these subjects in depth. If you need help on a higher level, apply for the private group. That's going to be in the description area. But the resources are all out there, folks. Don't act like it's not. Take advantage of these resources. And I can just tell you, the bottom line is you hold a great company and you sell that company, I promise you will regret it in a few years. I promise you that. That never fails. Great companies over 5, 10, 15 years do the most extraordinary things with their stock prices. And you hold bad stock and you make a profit, good for you. That's more of a trade. But for long-term investments that are great companies, let them do their thing, man. Let them do their thing. And that's the bottom line with that, okay? All those stocks, I wish they all went down. I wish Meta went back down to $100-something a share. I'd gladly buy a bunch more shares of that stock. I wish they all did. But I'm not going to hold my breath on them. Especially knowing the amount of money on the sideline right now that's just waiting for a big sell-off. As soon as you get in these sell-off, what do you think they're going to do? Hold out over there, or you think they're going to start piling in? The longer this goes, the more likely any small dips will start to be bought up. That is something to keep in mind there, okay? So, it's very similar to if you own a great real estate rental property in a great city, a great market, you don't sell that flipping flapjacking property unless it's an emergency and you desperately need that money. Other than that, you hold it. Because guess what? The property is going to appreciate much, much more over time. And the cash flow that property is going to be able to put you out is more and more almost every single year because rents go up more and more, right? So why would you sell a great rental property in a great market, in a great neighborhood that's a great home? It wouldn't make sense. It would be a bad financial decision. So you're going to do the same thing with the greatest companies in the world? Because I'll be honest, almost all the stocks that are actually doing terrific this year so far, they're all the greatest companies. Think about it for a moment. Almost none of the companies that have been beasting have been bad companies. A lot of the bad stocks have actually been doing bad. The ones that have been tearing it up, that everybody looks at, whether it's the Apples or the Microsofts or obviously Meta, Tesla, Nvidia, AMD, these are all the best companies in the world. They've executed over the past 5, 10, 15, 20 years to put them in those sorts of positions. Amazon's starting to roar, right? So just a little food for thought. Trying to walk a few people off the ledge maybe. Because it's a dangerous place up there. Believe me, I've been on it too many dang times. And made the wrong choice way too many dang times, okay? I appreciate everybody joining me as always. Thanks so much, folks. Thanks for being subscribed. If you need help, check out my private group. Apply for that. That's the description area down there, okay? We're there to help all the time. Appreciate y'all. Much love and have a great day.